Welcome to our webinar on the 5 keys to digital transformation in banking. Now, fintech and e-commerce giants are disrupting the banking industry, and time is running out to achieve digital maturity. Today's webinar can help accelerate your transformation. Our guest today is Jennifer Borchardt, Vice President of Omnichannel Experience and Strategy at U.S. Bank Wealth Management. We'll be discussing the current state of digital transformation in banking, how other banks have already gained digital maturity or are actually working their way to achieve it, and 5 things every bank needs to do to become digital ready. It is my pleasure to introduce you all to Jennifer Borchardt. She is the Vice President of Omnichannel Experience and Strategy for U.S. Bank Wealth Management. She was previously the Vice President of UX Strategy at Wells Fargo, where she led the evolution of bank brokerage and wealth management experience, including digital channels and innovation. She was also the lead producer at E-Trade, where she led the design and localization of E-Trade's international websites. And she was the on-site principal in the company's European offices and worked with the teams in Australia, Europe, Asia, and South Africa. So I can't imagine a better guest to have to talk about digital transformation. Hello, Jennifer.
Hi, thanks for having me today.
My pleasure. The digital transformation craze seems to be a little slow in the banking side from what I've read. And I think the biggest risk from that I've been seeing is all of this brand new competition.
Mhm.
So what's going on in the world today that makes it even more critical than ever for banks to get on the ball?
Banks, just like a lot of other organizations, need to meet customers where they are. And these customers have embraced digital and especially mobile. Many large banks, as well as smaller fintechs, really any large commercial company, some small businesses, everyone is going digital.
Mhm.
And it is important for banks especially to serve the needs of their users and be able to provide the products and services that they expect.
Mhm. I imagine a lot has to do with like the age of your customers.
Yeah,
And
users, especially younger users who are digital native, their expectations about the experience, how they expect things to work, are being shaped by fintechs, including Acorns, Robinhood, and Venmo, as well as companies outside of financial services. These companies include Apple, Facebook, Instagram, Google, and Swipe apps. I'm sure a lot of people know what I'm referring to. And so what's important to note here is that when banks are looking to competitively excel, they need to look not only with their direct competitors, but really every place where people are spending their time and forming their expectations about digital experiences.
right. And I think the biggest risk is that a lot of e-commerce companies, and even social media companies, are so much better at engagement. And that's the name of the game. And so that's a lot of catching up to do.
Tech companies, especially fintechs, are better at engagement because their experiences have been design centered on users from the very start. They have the latest information about cognitive psychology, usability, accessibility, and behavioral economics. And this is all baked into their experiences and their strategy from the very beginning. Whereas experiences from larger institutions, and this does not just include banks, these experiences have evolved over time based on legacy experiences and legacy systems. However, many large companies, and especially banks, they are now heavily investing in user research technology and new methodologies, including Agile, for digital transformation and creating more user-centric experiences to increase engagement and user satisfaction. So this is actually very encouraging. Some of these larger organizations and banks that have previously lagged in digital readiness and
Mhm.
digital experience, they're now starting to catch up with major investments.
Uh-huh. More than half of consumers would be comfortable using a technology company such as Apple or Google for various types of financial transactions. And uh, and JD Power and Associates said that digital-only customers now account for almost a third of retail bank clientele. A lot of customers prefer to interact with their financial organizations via digital, and that's compared to 34% who prefer branch interaction. So only about a third of branch customers prefer to come into the bank. And so it would seem that they're losing their advantage in terms of the brick and mortar aspect of branches.
That's not actually the entire story.
Hmm.
Regarding digital as a channel of choice, this is definitely true for certain types of activities, including viewing balances, transferring money, and depositing checks, the basics of financial management. But other types of transactions, including opening and closing accounts or handling something more complicated like a fraud event, phone and branch are still tend to be the preferred channels. However, as technical capabilities and customers' comfort with using technology improves, more of these complicated interactions are going to move to digital.
Right. I see some other statistics up here about how 44% of Gen Z consumers anticipate supplementing their traditional banking services with solutions from technology companies, and that 43% of customers regularly use mobile banking, and that customers who don't use their bank's mobile apps are twice as likely to be dissatisfied and not recommend that bank. And that's something we're going to be talking about later, but as far as customer experience, and that it isn't just about having a bank website or even mobile banking. So let's talk about where banks are today. How prepared are they? Are they, from what I've seen, they're lagging behind. Can you update us?
Large organizations, because of their complexity, because of their size, because of their legacy experiences and systems, I think it is fair to say that they are behind, but behind relative to what? Many fintechs, many startups, they're already farther ahead because they kind of get a head start. They were built digital first, and so banks are making large investments in changing their culture, changing the way that they invest in technology, in their people, and they are catching up. And I would actually say that the disparity between large banks and fintechs, one way that this is going to start to narrow is that as fintechs kind of hit the ceiling of what they're capable of, fintechs are great for doing limited types of transactions. Right. As they start to hit the limit on what they're able to do and they can't grow any further, a lot of this has to do with regulations. Banks and fintechs are going to start partnering.
Right.
This could be acquisition, or this could be a partnership. And so through these partnerships, both the large banks and the smaller fintechs will be able to do what they do best and be able to rely on the strengths of the others.
I'd imagine that partnership is important, particularly for the fintechs too, because I know that the banking industry is so regulated that it would take a lot for the fintechs to really catch up to that compliance. So I imagine working with it. So it behooves the e-commerce and fintech startups to partner as well.
Yeah, and in compliance with these very complicated and arcane regulations is really a barrier to entry. Some smaller companies, and this isn't just in financial services, this is also in transportation. Uber and Lyft are great examples. In Airbnb too, in fact. Their approach has been to just either go under the radar or take the approach of asking forgiveness rather than permission. And of course, as these companies are getting larger, expanding their reach, getting the notice of local and federal governments, they're starting to now have to comply with regulations just as their larger competitors do. And that is evening the playing field, so to speak.
Right. But as far as leveling the playing field, I know a lot of banks think that they just have to put an interface up, that it isn't just about user experience. It isn't just about a website. And the digital banking report from Adobe said that most banks and credit unions have simply put a nice veneer on legacy systems and products, ignoring many of the internal changes that are needed to compete effectively with the smaller fintechs. And it's nice to see that's beginning to change. I know a lot of these changes have to do with the cultural shift at the top. And I know a perfect example of this is JP Morgan Chase and Company, where the CEO has made it a mission to go digital first. So let's talk about what it takes to make that cultural shift.
Digital capabilities are very important, and transformation readiness goes well beyond technology, which of course has its costs and challenges, but culture is arguably the more difficult barrier. And these challenges are not happening only at large banks, but also at other medium and large organizations across many industries beyond financial services, including healthcare, technology, utilities, and retail. One thing that comes to mind, I was on a panel talking about agile transformation, and and I met a leader from Pacific Gas and Electric, PG&E. And it was really interesting to hear that PG&E was experiencing a lot of the same challenges transforming to Agile as the very large banks where I work.
Interesting. Now, what's interesting is that the cultural shift isn't just about a CEO saying we need to transform. It requires a commitment that goes right down to the deepest levels, including funding and talent acquisition and developing that talent and developing agile workflows and empowering teams to make decisions and the willingness to make risks and the budget to back it up. And I know that risk taking in banking is always something that is a riskier thing to do in banking than in many other companies. So I imagine that may be what's been a big barrier.
Yes, banks have historically been a little bit risk averse, and some of this has to do with the culture, and some of this has to do with the regulations. And the regulations, they're not getting any simpler. Digital transformation, particularly if it includes adopting an agile development methodology, which I know we'll be talking about later. This is one of the biggest keys. This transformation to be successful requires distributed decision making, which requires empowering lower level team members to make decisions. The reason why this is challenging, and especially in larger, more established organizations, the types of most decision making tends to be centralized at the top. Mm-hmm. And so making that shift, having leaders give up their decision making abilities is something which is hard for a lot of people to do. They are human beings after all. And in order to make this lower level decision making successful, it's critical to recruit, develop, and retain people who know how to make the right decisions and are able to thrive in agile environments. Mm-hmm. Shifting these hiring practices to enable that type of organization is neither simple nor fast.
Right. One way a lot of companies have found to make things simpler and faster is to embrace an agile methodology.
I think before we talk about how to do it, it's also important to understand where agile works best, mm-hmm. and where there's some improvements to be made. Uh-huh. The Agile Manifesto and the methodologies that respond from it were created by and for software developers. So it works very well in organizations that are highly focused on software. Mm-hmm. This is a lot of companies. However, a lot of companies are not focused on software. Banks are focused on something other than software. Yeah. Software empowers their goals, but it's not central. Agile, as it tends to be implemented, does not accommodate or serve other practices quite as well as it does software development. Mm-hmm. Things like design and research. These are very critical elements to developing good user experiences and empowering successful digital transformations. And so the opportunity is really, how do you adopt Agile? How do you adapt it so it can also accommodate ideation, research, design, and even innovation, right. Allowing business leaders to come up with and test ideas. Agile, because it moves quickly and you make very rapid and frequent incremental changes, is actually very well suited to design and research. It's just a matter of applying it in the right way.
Right. And one of the best ways to apply it is in improving customer service. Mm-hmm. So let's talk about the importance of customer experience, because I know that's pivotal to your role at US Bank.
Yes, it's been pivotal in my entire career, in fact. So several years ago, user experience was the hot topic, and many organizations started to recognize the importance of good experiences to customer acquisition, retention, and satisfaction. You need customers to have a successful business. As a user experience practitioner, I do know the value of good experience, and I was so encouraging for me to see top-level, C-level leaders enthusiastically embracing and supporting user experience. Now, this enthusiasm is shifting to agile and digital transformation. But these leaders are seeing that, like good user experience, this digital transformation and agile adoption does not just happen. Mm-hmm. It needs focused and informed effort and vision. Exactly how to make this happen, however, is still elusive to many companies, but they are learning, although sometimes slowly.
Right. I know that more than half of clients view digital as the number one factor in influencing their client service experience. And so a lot of people are really catching on to this. Another thing is about how this is one of the advantages that I think that banks have over a lot of fintechs, is because banks have so much data, and they've had it from legacy systems for decades, and that's a lot to catch up with. Once they're able to tap into all this data and use it using machine learning and other tools, it can really improve customer journeys in the way that other fintechs cannot even touch. For example, using customer data to deliver the personalization needed for superior customer experience and value, like actually making on-the-spot recommendations and being able to predict consumer behavior and anticipate their needs, and then provide offers at the right time, which is the perfect way to do not just marketing, but actually service your clients. Because machine learning can discover customer patterns that enable the future predictions and ideal product offers that are hard for humans to anticipate, because they can see clusters that we can't. So tell us a little bit about that.
So banks have no shortage of user data, but the challenge is how to extract order and value from these very, very large sets of data and use it to create meaningful, timely, and personalized experiences. As AI and machine learning advances, there are more opportunities to not only identify, but also predict customers' needs based on their behavior and what banks already know about them. For example, a bank may notice that a customer keeps a high, stable balance in a savings account. With this information, the bank could then recommend that the user transfer their money to a money market account with a higher interest rate, or even invest the cash in an investment account, a self-directed brokerage account, or a robo-advisor. This benefits the customer by giving them higher return on their money, but it also benefits the bank by empowering a deeper, more valuable relationship and increasing customer loyalty. Customers feel like my bank knows me and they have my best interest in mind. This is even more powerful as it happens over the life of a customer's relationship with their bank. Providing the right products and services at the right point over the customer's journey. For example, a student and her family get student loans from a bank to pay for college. Then the student opens her first checking account, gets her first credit card as she starts college. In time, these loans are paid off and she gets a mortgage, perhaps a small loan to pay for a wedding. And then a few years later, she starts a 529 plan for her kids' education, and the cycle continues. This is how banks can use data and life events to serve clients over their entire life and their entire financial journey.
Terrific. Now we have one question. How should we go about improving customer service, or whether you want to improve the time on the site or to optimize it? So let's talk about both those things.
I think the heart of this is serving the customer in the best way. Makes sense that somebody doesn't want to spend more time banking than they have to. Banking tends to be very task oriented and oftentimes very time sensitive. And so what we want to do is not necessarily to maximize the amount of time that they spend on the site by making things go more slowly, but we want to make the most of the time that they do spend. So figuring out what people do the most, making it easy for them, checking their balances, transferring money, paying their bills. If they're an investor, placing a trade, checking on the status of their order. We want to make it easy, frictionless, and pleasant. There is a way to increase customer engagement though, and to increase the time on the site, but we want additional time on the site to be because we are serving a customer's need, not because we're making it harder for them to get through what they need. One example is that providing contextual educational content. Someone's looking at their balances, they may notice a link to an article about investing, or about preparing for tax time, or something which is meaningful to a customer. And so there we give the user a relevant opportunity to spend more time with us, to learn. And so instead of this additional time on our site or on our app being a frustration, we're actually providing value and deepening the relationship. It's time well spent.
Right. Yeah, they should be on your site longer because they want to be, not because they can't find what they're looking for.
We don't want to hold them hostage. We want them to to stay with us a little bit longer because it pleases them.
Yeah. Reminds me of the old days when banks would have cookies and have little entertainment things going on in the lobby just to keep them in the lobby longer.
Very much like that. Well-written educational articles are today's lobby cookies.
Mhm. Let's talk about mobile, particularly digital banking, being much more than having a mobile app. Let's take a look at the advantage of having mobile apps. Frequent users of banks' mobile apps are the most satisfied. More than 3/4 would recommend their bank to others. Let's talk about another aspect of mobile banking. It really helps banks do something that banks have been trying to do for decades, which is reach 20% of the population that is unbanked or underbanked.
Actually, I'd like to revisit satisfaction
Oh,
as it
okay.
relates to mobile usage. I think that's very important. Increased satisfaction with mobile app usage could be due to a couple of factors. First, banks are making a lot of investment in their mobile technology and they're employing user-centered design approaches, so user satisfaction is kind of baked in. Second, customers who download their bank's mobile app, they may already have a higher level of trust and satisfaction with their bank. Customers need to make an active choice to download a mobile banking app in most cases. They need to make a decision. These apps are not preloaded onto your phones. However, Google Pay, Google Pay is preloaded into many new Android phones, and Apple Pay is already part of iOS on iPhones. This too actually presents a challenge to banks in their mobile apps. It's easier, it's less friction to use something that's already embedded in where you are, already in your device. So banks do need to take the extra step to make people know that it's going to be worth their while to download their apps.
Because apps have such a short lifespan. A lot of people only have apps on their phone for a day in order to use whatever it is they're doing. And only use about a handful of apps regularly. So it's really places a lot more emphasis on banks to make it engaging.
Yes, and also when people upgrade their devices, and I think this has been a really cool feature as a mobile device user. When you upgrade your phone, a lot of times you're able to bring your apps with you from your old phone, and so that actually increases the friction of downloading new apps, which makes it even more important for people for banks to create apps that are useful that people want to connect with and stay connected with. Another interesting topic of customer satisfaction, and this isn't necessarily related to mobile apps, but it is related to banking. Customers who've had negative experiences, such as fraud, which is a really stressful experience, if these negative experiences have been positively resolved by their banks, these clients report a higher level of satisfaction than the customers who've never had such bad experiences. So I thought that was really interesting. And it also touches on something I talked about before. Right now, to take care of a stressful fraud event, it's much easier, much better to go to a branch or by phone. But again, as banks' technology is evolving, even these very complicated high stakes events will eventually be able to be fully self-service using digital channels.
Right. And I'm sure it really places a lot of emphasis on the live customer service aspect to understand every part of the digital channel that the customers have gone through this, so they can understand what they went through in the course of that fraud event or any other customer service issue.
Yeah, digital, especially mobile banking, is a really important way that people connect with their banks. But we do need to remember that this is not the only way. Recently, banks have invested very heavily in online and mobile banking, but now they need to take a step back and consider how the digital channel works across the entire ecosystem, across the experience, across all channels. And this includes ATMs, phones, branches. And as much as possible, this experience needs to be consistent and supportive across channels, and customers need to be able to use their channel of choice when they want, for what they want.
Mobile apps are a great way to reach underserved banking populations.
Yes. So mobile banking is critical. It's valuable to a lot of people, but in some cases, it's a lifeline for unbanked and underbanked populations. Smartphones, especially Androids, are ubiquitous because they're portable, they're easy to get, and they're more economical than computers. there are a lot of people who have a smartphone, maybe even the newest smartphone, but don't have a computer at home. I actually am effectively one of those people. I used to live on my laptop, and now I hardly use it. I just use my smartphone. And because of this behavioral shift, this has affected how designers create mobile experiences, rather how they approach their experiences. When we take into account where a lot of these unbanked and underbanked people are, they're not using iPhones. They may be using old iPhones, and that's actually very important. So when mobile banking first became a thing, the earliest mobile apps were designed for only iOS. iPhones were the first widely adopted smartphone, and they tended to be owned mostly by affluent people. Now, as Android dominates market share, because phones running Android are all over. They're cheap, they're or free, and they're plentiful. This is true in the U.S. and all over the world. So now designers are having to think about, how does this work on Android? How does this work on a variety of devices, especially older devices, as people are keeping them longer, more rather than just designing for the very latest device at the very at a particular time. So more and more bank customers are becoming mobile only. This shift has also affected where we can look to for behavioral trends in banking. American banks used to look to developed countries in Europe and Asia for the future of technology and banking. Technology and banking innovations were adopted there first, they were developed there. They were sometimes years ahead of when these technologies became widespread in the US. This was the future of American financial services. However, as the unbanked and underbanked populations grow in this country and other parts of the world, especially with increasing number of immigrants who, regardless of their documentation status, they have lives to live and business they need to conduct. They need to send money to their friends and family. They need to pay their bills. And for these people, fintechs and accessible technology, rather than big banks, enable these activities. So developing countries in Africa and Central America, for example, can show us how these extra banking financial systems can operate at scale. Large populations using very simple mobile phones and very simple payment applications. Many of us may take this for granted, but there are really important things to learn, and I believe this is only going to become more relevant as time goes on.
Well, let's look at advantages that banks have, which is the branch. And this is one way, in addition to having all of this data on consumers, is that banks have the advantage of the branch. And how can they branch out and use that to increase their foothold in the digital world?
Yeah, so different channels are better suited for different types of activities. And many times multiple channels are being used concurrently. Someone who walks into a branch may have very specialized needs. They may have an established relationship with their banker. And so branches definitely do serve a purpose. However, the branch visit of today looks very different than the branch visit just a few years ago. A few years ago, people may have walked into a branch, talked directly to a banker, and then leave. But what happens today is actually more omni-channel. A customer walks into a branch with their smartphone, running the mobile app of that bank. Their teller, their banker, they are face to face at a desk or perhaps sitting side by side, and the teller or the banker has an application on their tablet. And so now you have the in-person experience, you have the mobile experience that the client is taking part in, and at the very same time you have a tablet application that the banker is using. And all of these things are working together to serve the customer in the best possible way. I would say the biggest advantage that branches provide is the human connection. No matter how advanced technology is, no matter how intelligent AI becomes, nothing is ever going to fully replace the human connection.
That's probably why majority of U.S. customers feel that online-only banks are somehow less legitimate, and that even millennials and Gen Zers prefer to walk into a bank and talk to a person when they're doing something like opening an account.
Yes. Or And here's a personal use case, getting a cashier's check to put a deposit on an apartment or buying a car. My primary bank is almost completely branchless. There are 2 branches in the entire country. One happens to be here in San Francisco, the other is in New York.
Uh-huh.
And 99% of the time, this is just fine. But when I needed to have a cashier's check for something, I went to another large bank, a competitor, and opened an account. And I keep this account because branches and in-person relationships serve an irreplaceable purpose. And this
Right.
is especially important for people who cannot use technology, who are not familiar with technology, older people, and people who have very high value relationships with
Yeah.
their financial institutions. An app isn't going to talk to them about succession planning,
Right.
about how they're going to manage their millions of dollars. And even though many people may not be able to relate to that right now, it is something that's very important. It's very important to banks, certainly, because these are very valuable clients. But being able to provide a personal experience that touches on the emotion of human connection is something which banks know apply to everybody.
Uh-huh. And that's something that's going to be really hard for AI to replace.
Yeah, oh, certainly.
It also explains why the highest overall satisfaction comes from branch-dependent digital customers.
Mhm.
So, this was an interesting thing that I heard from McKinsey, was saying that for incumbent financial institutions, the biggest hurdles relate to organization and skills as much as investing in technology at scale. So with that being highlighted as one of the problems, let's talk about how banks can improve these skill gaps.
Yeah, I think one way that banks can improve these skill gaps is by training their team members to to embrace technology, to learn about technology, so they themselves as team members are um, understand how technology works, but are also able to help their clients
Mhm.
understand how technology works and adopt it. Again, relationships and human emotion and connectivity. This is something which technology can never really replace. And so developing soft skills,
Mhm.
leadership skills, organizational skills, communication, these are all very important.
Right.
It's also important for banks to invest in training for their team members, learning about agile, learning about different types of technology
Mhm.
applications, learning about how to create a good user experience.
Right.
And good user experience is for everybody. It's not just designers, it's not just me and my team,
Yeah.
but everyone has a stake in good experience. And this is the type of training which banks should invest in for their team members,
Mhm.
but individuals should also invest in it for themselves as they explore their own personal and professional development.
Right. So would that include things like courses in design thinking
Design
and
thinking, absolutely. Project management, becoming an agile scrum master, getting your PMP certification.
Mhm.
But in addition to training, just learning how to communicate with other people, learning how to connect with other people.
Uh-huh. Yeah, that's terrific. Now, I think we're coming to the end of our prepared portion, and so we invite people to provide their own questions at this point too. But just to sum up, because we talked about there are 5 keys to digital transformation in banking, that relies on making a cultural shift from the C-level down, learning from the success and failures of other organizations that are trying to transform, transitioning to agile methodology beyond IT when it's applicable in a banking situation, and it
Mhm.
isn't always the case, but there are many areas outside of software development that Agile can help. Of course, focusing on customer experience and making it better at all touch points, from the outgoing message in the voicemail to the branch to the apps and beyond. And finally, bridging internal skills gaps in digital capabilities through training incumbent employees. And that includes not just digital skills, but design thinking and human capabilities to make people
Yes.
much more personable to be able to improve that social aspect that banks really bring to all people.
Yes, and getting training in data science, if this is something that you're interested in, has never hurt anybody. In fact, I think this is probably one of the most important fields, not just in banking, but for anything. Data is going to drive so many decisions, so many experiences, and shape a lot of organizations. So that is also a wonderful area to explore for training.
What are some things that a smaller bank can do to bring their staff up to speed most quickly to help with this transformation?
Well, investing in technology, certainly. Even though a smaller bank may not have the same large training budget as a large bank, there are a lot of free and very affordable resources online in libraries for not only executives, but also the lowest level team members to learn about digital transformation. This is a topic that's in the news, that people are talking about all over the place. And individuals and banks alike can take advantage of this.
Do you have any recommendations to help make a cultural shift? How do you manage upwards in order to speed this transition along in terms of the cultural shift?
In terms of managing up, executives rely a lot on data. And so providing data to rationalize your recommendations, showing what competitors are doing, how they're doing it, and this is something which is often missing from competitive analysis. How can these best practices seen elsewhere apply to a particular organization? Just because it works for company A doesn't mean it's going to work within company B's culture or company B's technology infrastructure. And so taking that extra step, providing thoughtful analysis and actionable recommendations is going to go a very long way in influencing leadership.
Right. Now, someone is asking, what's the difference between business transformation and digital transformation? Can you talk to that? Or
Oh yes, business transformation, I would say, is larger. It's more overarching, whereas digital transformation is more focused. It's focused more on the digital channel. It's focused more on the technology and services that support the digital channel. But business transformation includes more of the cultural shift that is necessary to ensure a successful digital transformation. And one of the big things, one of the big pieces of that, again, is decision making. Empowering people to make decisions and empowering people to take more ownership of what happens day to day. Instead of just following directions, they have a stake in the business. They have a stake in the decisions. And this not only results in better user experiences, but it also results in better team member experiences. People are more likely to be happy, satisfied long-term employees if they feel like they have a stake in control over what's happening.
Oh, excellent. Let's talk about branches. Are they going away?
No, but they are changing. In San Francisco, there are a couple of very large banks who have piloted the branches of the future. Branches which used to be large and plentiful, there are fewer of them, and the ones that remain are smaller, but they actually provide, I would say, better service, at least better service for people who are connected to digital, like a lot of us are. So there is a branch on the Main Street in San Francisco on Market Street that used to be very large. Now it's about a third of the size, but there's a lot more you can do there. There are ATMs that dispense change rolls, which is very important if you're a business. There are fewer tellers there, but the tellers that are there can do a lot more. They are well versed in more areas of the business, but they also have these very powerful applications on their tablets that they carry around with them. And they can engage directly with customers who come in, customers or prospects, even people who don't have yet a relationship with the bank. They're able to do a lot more, and they're using digital to increase how much they can service their customers and the quality of that
Hmm.
service.
Any predictions for the future, like even in branches? Like I've seen some ideas as far as computerized kiosks, not just ATMs in
Mhm.
lobbies, where you have a live person on the other end. Are there any other, or describe a little bit about that, or any other trends you kind of see down the pike? Because we have a retreat here is that we have an inside person who can tell us
Ah,
what's what's looking forward.
that's actually not the future. That is happening now. And there is another large bank who has video chats with tellers. This is something which they've had for a few years, and
Uh-huh.
it's really great. It's really neat to see it. So
And it's video chat over mobile, right? Over the,
no,
or it's
they
like,
actually have these screens. They're about
oh,
iPad
oh, in
size.
the lobby.
They're actually in the lobby. You walk in, and if you want to talk to a banker live, then you can do that. But instead of the banker needing to be at that physical location, they can be anywhere. They're centralized,
Uh-huh.
and these bankers can service people all over the country,
Right.
wherever these video kiosks exist. And so someone can go in there, and that can be their primary interaction, or maybe they're at the ATM. They run into a problem. They have a question that an ATM can't answer,
Hmm.
but they can then go to the video kiosk and talk to a banker in real time and get what they need.
Hmm.
It's very powerful.
Wow. We're running to the end of our time here, so I just wanted to say thank you again, Jennifer Borchardt, for joining us today.
Thank
And
you.
we look forward to talking to you again in the future.
Thank you.